Hey team, very good afternoon to all of you. I hope you're doing well. Apologies on yesterday, completely slipped my mind. My charts were prepared. I should have asked myself, well, why are you doing your charts on a Saturday for no reason? But nevertheless, I hope you'll all forgive me. And we haven't missed anything because the markets were closed anyway. So I'm very sorry if you were expecting that, but hoping that you wasn't because nobody messaged me. So I'll take it as you've given me a pass. Well, before I get started, apologies if I sniff, cough, or sneeze. For whatever reason, in 38-degree heat, I have probably a flu. So I'm sorry about that. Probably sleeping with the air conditioning. My bad. Nevertheless, let's first talk about a position I took on US 30. Being honest, a bit of a naughty position, I must admit, but you guys know me. I'll hold my hands up. And the reason why I took it, to be honest, well, it looked good and it felt good. And I know you shouldn't always go off trading when it just looks good and it feels good. But actually, when you start to back your own inclination with the charts, paired, of course, with the technicals, then you can just trade with confidence, right? And I believe that is more of the problem, not more of the problem, but that is certainly a problem with trading. Some people lack confidence. Some people can even be overconfident, which in my own experience, certainly starting out, was my own detriment. I never had an issue with executing positions. It was more understanding, well, should I be executing that position? So for me personally, it was trying to actually categorize okay, good, and great. And there really is a difference between okay, good, and great. And I hope over the last, let's say, months, I've been able to showcase what looks okay, what looks good, and what looks great. And depending on your risk, you may be okay to take okay types of position. And with okay types of position, then what are you looking to do? I'm looking to manage those type of okay positions in a more aggressive way than I would, let's say, just compared against a good or a great position. When it's good or great, I'm happy to be a little bit more lenient on my management process. So I'll show you guys through this position now. So of course, it's US 30. So I haven't traded US 30 for a very, 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 very long time. In fact, the last time I traded US 30, I mean, I can't even remember to be honest, but each their own. I have tested my strategy rather on indexes, on stocks even, and I just prefer Forex. But US 30, thank you very much, Denise, for the heads up. It certainly does trend in a way that we like to see trends, right? And I don't what would be the word? I don't discriminate between any way in which I can make money. So US 30, of course, weekly time frame. If you were to go back through what I explained earlier on, I had said that price was very bullish. Therefore, I'm not really comfortable with looking with long positions because as I looked at the lower time frames, when price is moving like that, and again, you guys will hear this over and over again, I don't really deviate very little from my analysis and from my breakdowns. But when I'm seeing price just move in that kind of format with no clear higher highs and higher lows, I'm the first to say, well, it's difficult to identify that. So therefore, it's difficult for me to place order blocks in areas where I can clearly see in an uptrend a higher high, higher low type of formation where I'd like to put in an order block. But with that said, I'll do my very best to place in an order block. And that may not be where I'll be looking to take a long position. Perhaps that might just be where I'm looking to manage my short position down to. So US 30, we were looking at potential reversal positions as a result of course, a tremendous high. After a high, what would we be looking to expect? A higher low. So with that said, we recognize a higher low. It is an aggressive type. It is an aggressive type of position, certainly based on the weekly, because we're not breaking any structures to the downside, and that's absolutely fine. When we then start to go down to the daily time frame, we could then identify, well, there's a particular session high in the market based on the daily. As a result of that bearish engulfing candle, it left us with a bearish order block to really start building our bias from. And as you can see by the daily candles, tapped into that daily order block, and then price moved towards the downside. On the way down, it's then down to us to use our discretion to say, well, hold on a minute. despite price not breaking the ultimate low in the market, i.e., where price actually pushed from, we must understand that this particular trading instrument is now perhaps in a downtrend. So we're taking that, we're using it as our discretion. So when we're looking at price in a downtrend, we're then looking to isolate order blocks to the highs to then look to manipulate towards the downside. It's all bread and butter type of stuff. So then looking to identify those order blocks on the daily time frame. We had an order block just here, it was mitigated, price moved off again, and then we can identify this bearish engulfing candle where then as a result of that bearish engulfing candle, we're then using the order block behind. As a result of that, we're then looking to put this order block or refine that order block down on the lower time frames. And of course, this daily order block, as you can see, is just in and around this area. So then, as always, I'm then looking to identify price action and structure and what's going on. Can I identify clear higher highs and higher lows? So we're then looking to put some structure points in the market and see if those structure points would hold towards the upside as a result of, and again, at this stage, it was guesswork, to be quite honest. There's a high in the market. Here's a low in the market. Are we then going to expect this flow to create a higher high? So is it a higher high, higher low? Or is it in fact the first low followed by a lower high, followed by lower low, lower high, and a lower low for a lower high continuation? Sure. That's what we got. Well, that started my basis for looking at a potential short on US 30 on Friday. So now, when we then refine this order block down, as we can already see, we are out of a daily towards the downside. 4 hour order block. Well, why that 4 hour order block? Difficult to say, to be honest. There was another 4 hour order block available, but what did we have on the lower time frames? Well, before we even move from that, let's look at that 4 hour 50 EMA coming into play. Can we start to rely on the performance? Well, we were trending above price in an uptrend. We broke below. Perhaps this was the first sign, and that's when we had our structure point and said, okay, structure point, perhaps we have now a break of structure. So first sign, pull back, break of structure, second sign. Then have a look at what we're doing. We're respecting that 4 hour 50 minute to the downside. Of course, we have a caveat to that. It happens from time to time. However, the overwhelming prevailing trend was, of course, lower low, lower high, lower low, lower high for potential lower low continuation. So looking at that 4 hour 50 EMA, and I want the EMA to now guide me in terms of where I should want to put my order block. So I'll put this order block in the market, and then I'm refining that order block down. Let's have a look at the 15-minute time frame to see exactly how that supported my position. Tricky, but it makes sense if you can make it make sense. So 4 hour order block, we know we're coming out of that higher time frame towards the downside. We recognize there's an area right there up at the highs, but what about if price doesn't want to go to my highs? Prior, I would be more consistent, I must admit, and say, you know what, let me just wait for the highs and lows a couple of years ago. And I'll definitely be admitting that. That was I'd say, the easiest way to trade. Wait for those highs and low areas. Of course, I recognize, certainly from teaching and also posting my analysis, that that's not always enough for some traders just to wait for the highs and lows. And I do understand that. Hence why in the middle of those areas, I'm also now more so than I'll even say a year ago when some of you listening would say that I've changed slightly different in terms of my analysis. Absolutely, I have. I'd be waiting for these highs. I'd be waiting for the absolute lows. And I'd probably do nothing else in between apart from an Asia range trade. So I haven't changed too much, but I am now looking to place higher time frame order blocks in the middle of those areas to see if I can make trades make sense. So that's what I'm aiming to do at this stage on even US 30. So that order block's in the way, or on the chart rather. And then if we go to the 15-minute time frame, I'm looking at price action again and structure. So I do have a couple of reasons why I could have lost this position. Absolutely, I have. So we had a low in the market. After a low, price came back up for the lower high. That then created the lower low. So I believe if price came back up to this area, perhaps it would have tapped into this 15-minute order block. And also there is an order block even lower. So the question is, well, Charles, why not this order block to wait for? Why not even, let's have a look. Why not that order block to wait for? Now, the answer to that initially is because, well, This 15-minute order block was refined from the daily 4 and now into the 15. So I'm trying to make it make sense. As well as that, we had the 4-hour 50 EMA supporting, in my opinion, this order block more so than this one and this one. So you're trying to build the picture up to why you then want to take the position. So then what I had to see in the market was, well, what kind of position would I be looking to trade? Could have been a snap and a retest. This is what I put out to you guys on the Friday. That would be my best type of opportunity to then understand, well, actually, price is looking to go to the downside, make the move to the short, come back up, fill the liquidity, and off we go to the downside. It never happened. However, what we did have was a beautiful looking Asia type of criteria. So here's the Asia low in the market. Then London opened, broke that Asia low. More importantly, did not fill Asia. So straight away, I'm excited. Potential Asia range looking position. Up at these highs, previously, I'd be looking at the 1 minute order block up at these highs, and I'd take that quite aggressively by way of 1 minute structure, considering we've already had a break of Asia lows that created the most recent push towards the high. However, so straight away, I recognize, well, I could have taken this quite aggressively, but I'll add a layer of confluence into that position to try and add, what can we say, the cherry on top of the cake. So then what I've done, so the 15-minute time frame, we can see this 15-minute order block respected beautifully, a couple of nice rejections coming from the area, and most importantly, we didn't close above that 15-minute order block. So the fact it's a structure point, there's an order block there as well. I'm then looking to take a position down to the downside. What I did, instead of going down to the 1 minute, which also looks okay, but it's the 5 minute that I use in all honesty. So the 5 minute, I refined that 15-minute order block down, and we got this 5 minute order block right there up at the highs. Again, why? Let's have a look at price action on the 5 minute. The question that I'm asking myself is, what caused the most recent low? Why use this for, why use this area is always my question. So I'm looking to the left and I'm saying, well, there was an area here, it's mitigated straight away. My only secondary area is this 15-minute order block right up at the highs. But did that 15-minute order block up at these highs cause the most recent low on the 5 minute time frame? The question, well, the answer is no, it didn't. We made a low, we pulled back up for what we could have anticipated for the lower high. We didn't make the lower high. We just hung around the area. Price came back up. For whatever reason, we then made the drop from here. So therefore, I'm looking to isolate this 5 minute order block that caused a push towards the downside. Have a look to the right. Where's price? Price came in beautifully. Respect the order block. I didn't go in straight away. I gave myself a bit more of a chance to understand, well, you're very bullish going into that area, Charles. I understand you've respected the 15-minute time frame, but just give price a little try. Now, what I would be looking to teach is here is a structure point in the market, wait for price to break, pull back, off you go, take the short. However, as we said previously, as a result of London breaking Asia lows, you could have taken this a lot more aggressively anyway on the 1 minute time frame. So the fact that we're onto the 5 and not the 1, straight away, I have confidence to take that position. I'm not just reliant on a 5 minute order block, 5 minute time frame. 1 minute order block, 1 minute break of structure, 1 minute time frame. I'm up a time frame, therefore, I have a degree of confluence stacked up against a 1 minute anyway. So therefore, I had to see what price was doing coming out of the 5 minute order block. Most importantly, what I was happy to see is as a result of price being bullish, we did not make a high followed by a potential higher low. Then I was expecting a higher high. The moment I did not get that higher high, and we had two beautiful 5 minute candle closures coming again from the same area, I waited for something a little bit more. A little bit, could I say hesitant? Okay, I could admit that. But I have to wait for something, right? I can't just take a position. Have a look at that candle. Bearish engulfing. Okay, not quite engulfing, but certainly a nice bearish candle coming from that area after price gave us those two nice rejections. Had that bearish candle closure. And I'll be honest, as soon as I saw that candle close, I set my instant execution for a short position. Now, with that said, look at the management criteria. I recognize my targets, Asia field. That's what I'm going for. I also must recognize, let's have a look at structure, Charles. Where could your price be, where could your trade be null and void based on 5 minute order blocks? So I wasn't distracted by the fact, oh, you're in a nice trade. Don't forget about management. It's going to target. I'm looking at where this could have gone wrong. And I'm looking at any order block in and around the move that pushed price to the upside because I recognize I was aggressive here. Therefore, after this high, I know a higher low has to come at some point. It's just okay. I don't know it's going to happen, but I am expecting it to happen. Therefore, I'm looking for the imbalance in the opposite direction where I'm going to expect a bounce from to then potentially take me out. Don't mind being taken out break even, but these types of positions, I would say I really, really dislike losing because you can see it happening all the time. Even if you're in the 1 minute time frame, any time frame, once you see the imbalance against your position and you recognize you have been aggressive, I find it very difficult to look myself in the mirror if I lose that type of position. And I'll be honest, I am susceptible to saying things like, well, it's a good trade, let it play out. And previously, that was my style. You've done your analysis, let the trade play out, don't micromanage. But I still don't believe this is micromanaging the trade. I think micromanaging your position would be doing something before gets to that area. But I think this is smart management, and you can see exactly what's happened. I'm using the 5 minute time frame, therefore I'm using imbalance on the 5 minutes. Now I'm not going to close my position out here, but certainly what I did was move towards break even. On the flip side, if there was an order block here, I would have had to have managed my position by there. And the question would have been, well, Charles, do you actually have enough range? In all honesty, I probably would have still taken that position, moved to break even at the same point prices, then tap into that imbalance just here, and it would have just been it is what it is. If price bounced up and tapped me out break even, then it is what it is. But the reason as well that I like that position is I felt that I had enough range back down to the imbalance to actually move towards break even. And naturally, I closed the position eventually because I was just running out of time. But with that said, I still would have closed the position here. But I hope you guys can see that there was no imbalance here in the 5 minute. Hence why it actually allowed me to kind of say, you know what? Go for that position. So that's kind of my naughty position that I took on Friday. But with the explanation, I hope it makes sense, particularly that 5 minute structure. It just looked beautiful, right? 5 minute order block caused a low in the market. We've come back up, respected it, didn't enter immediately, better position, wait for this to be broken and have a pullback. Could have been on the 1 minute. So I'm using the 5 minute, had a bearish candle closure, instant execution, management by imbalance in the opposite direction. Now, that written in the journal for my investors to actually have a look at that as well. I think it's a solid looking position. So that was US 30. Sorry to go on. Probably not how you expected to start the call, but I like a good trade review. And so you guys can know the different types of position that you can take. You can, okay, I won't encourage deviating from your plan, particularly if you're searching for consistency. But as you can see, have I really deviated from the plan? I've used all factors in terms of building that bias. I've waited for confluence to align, and the position was taken. And I accepted the risk somewhat by then having to manage by the imbalance in the opposite direction. And I was looking for Asia to fill. As simple as that. Wasn't looking for price to head back down to the daily 50 MA. A very conservative target. Had a nice range back down to that low, 3.5%. And the answer, or really the question was, well, why not execute that position? So that's that, to be honest, team. US 30. Thank you again, Denise. Nice looking pair. And we'll continue to analyze that throughout the week. So let's start from the top again. DXY, where are we? Well, this could be a bit of we'll see. I mean, I think this could be a really nice week going ahead. Still with that same weekly outlook, we're looking at price making potential higher highs and higher lows, certainly on that weekly time frame. It goes without saying. Now, for the entirety of the week, we were looking at this as a potential range. However, what I'm almost confident to say now is I believe that range has now been broken to the upside. Let's have a look at the daily candle. This daily candle, although it's slow, we have to take it for what it is. We can say this daily candle has just about closed above my illustration. I understand it's just an illustration on the chart and price doesn't have to respect it. But if we even use that wick just here, what I'm using, and we have to take the facts. We've closed above. And then the next daily candle absolutely rejected the area and closed above. So it's kind of giving signs that the DXY is doing what we expect it to do, make a higher high after a higher low. Of course, I really would have expected the higher low to come somewhat deeper, but what's to say on the weekly time frame that this wasn't the higher low? After the higher high, higher low, we've now started to push up. And what's important to say on that weekly time frame is this is the first weekly candle in, let's say, one, two, three, four, in a month's worth of price action. We finally managed to have price close above an area in the market. So we have to take that as facts. So the weekly time frame is looking still very bullish, and perhaps a question or the answer could be, has price actually now found its way towards the upside? With that said, the daily that time frame is a bit more, I'd say, explainable. We've got that high here after a high, higher low. I would have liked price to tap a little bit deeper into the daily 50 MA, but again, it is doing its job. Price doesn't necessarily have to tap in to the EMAs, but it's more of our guide to suggest that, okay, like it is now, has price actually done its job? It's moved away from that daily 50 MA, and perhaps price could well be on its way back up. With that said, I would still expect a pullback for the reasons that we know. After a high, we'll be expecting a higher low. So if this is now the most recent high in the market based on the weekly time frame, forget about the daily for a moment. I recognize we haven't closed above most recent higher highs on the daily, but we got to take for what is on the weekly. Now we have now closed the first bullish candle in a long time on the weekly time frame. So I'm still expecting a bit of a rejection on the day on the DXY. And the reason for that is, have a look at this. Still the same outlook. Bearish candle, order block. Are we respecting that order block? Yes, we are indeed. If I've drawn it correctly, let me put it as it should. So just there and here. Cool. So here's the highs of the order block. Prices are at the highs of that daily order block. And now I'm expecting price to want to reject from that daily order block. So until we actually do, I must admit, get a daily candle above, close above that daily order block, which would simultaneously, you'd like to think then, close above that area and then start to support our thought process of indeed higher high, higher low, higher high. I am still slightly bearish on the DXY, despite my overall sentiment is clearly bullish. So let's have a look to see areas in the market where we could potentially anticipate price rejecting from those highs. We had a 50-minute order block right up at those highs. Let me bring that. In fact, I was supposed to show you guys this as well. Just really to show you that we're trending on the daily time frame, and that trends happen on every time frame. It's as simple as that. I just drew that to show you guys, so we can clearly see that prices higher highs and higher lows, highs and lows, highs potential. There is the low. We're now in the process of making that high. So just to add a bit of meat to the bones for that one for us all. So that's a daily time frame, 4 hour. Of course, we are bullish and we're stepping up. Now we did, or I thought about that range. We are stepping up in that range, leaving order blocks behind, and most importantly, we're now seemingly respecting that EMA. The EMA is now on its way up. You see, initially, EMA was going right for the middle of price action, and now what I can see is EMA is kind of having that curve up. So therefore, look at that. We're just seemingly respecting it. So my thought process is just as I've drawn. I know that looks a bit funny, so I'll get rid of that. But the thought process is I think we are due a pullback. The pullback could well be into that 4 hour 50 EMA area, start respecting that 4 hour order block, and then price could well then take off, create that higher high, daily candle closure above the area. And there we are for DXY bullishness coming out of the market for a little bit longer before we then see that higher low to resurface its head. So up at the highs, we recognize a potential area where price could look to reject from. We had this last week. And have a look to the left-hand side. Mind your eyes for a second. I'll do that so you can see the order block clear. So we had price move towards the downside. That's fair to say. Is there an order block that we can see caused that break of structure? Simple as that. Let's look up to that high. If I then zoom back in, there's the order block. Let's bring it to most recent price action. Here's where we are. So we're trading out of an area that caused a significant low in the market at some point in time. Fair to say. Doesn't mean immediate short positions are now should be executed. It just means, hey, perhaps we're in a good area. Had some structure points in the market. This was absolutely guesswork because look at the move. This also was absolutely guesswork, but supported by, guess what? An order block. And then guess what? It was respected towards the upside. So good going in terms of anticipating where market can potentially turn around from. Then we had that 50-minute order block because price had then kind of hovered around. We're then calling it a session high. With session highs, you guys know me, I'm looking for a bearish candle to close, engulfing candle, to then allow me to have this process where I use the order block, wait for price to then come back into that order block, look for the short position down. So I'll be using that same type of methodology on the DXY. So what am I saying? What I'm saying is potentially as a result of now pushing into this order block and not actually creating a higher high, what my thought process now is on the 15-minute in terms of our little pullback that we're examining. Here's the low. Now we're coming back to create a lower high, potential lower low to be created, failed to do so. So at the moment we are not creating new highs. We're certainly not creating new lows. Therefore, what I need to do is isolate an area in the market where I'll be comfortable to see a break of, pull back, and then I'll be ready to, let's say, short the DXY for good example, or look for potential longs across the cross pairs. So that's my thought process at the moment. Sorry to go through it from head to tail, but you know me already. So what I'm seeing already here would definitely be a good structure point in the market to wait for price to be broken. There's no order block or imbalance here, so this is your more conservative break of structure. But don't forget, we're only using the DXY as a confluence. Of course, if you are waiting for those key structure areas to be broken, then you're doing absolutely nothing wrong. If price starts to move without you, you wake up and we see price down here, you guys already know what I'll be saying. Price has now broken that key structure point. All what price needs to do is come back up into this session high, give me a bearish engulfing candle, and allow me to start that process. To be honest, when price gets it, any type of 15-minute candle, I'll be looking to manipulate that session high to the low because guess what? We've created a new low in the market after a new low, lower high for that lower low. So any type of confirmation, I'll be looking at taking that short. I'll probably be down to the 1 minute time frame, look for a very intricate 1 minute break of structure as confluence, head to my crosspair and see if a long position is available. So I hope that makes sense, team. And with that said, so of course we're expecting a slight pullback. I believe that slight pullback area could be in the area that you can probably see. We're respecting that 4-hour 50 MA. Here is an order block that is very much so available. Just want to see if there's any imbalance on the daily time frame as well that needs to be filled. If I can do that. Yeah, just about. So definite room. Let me put that in on the chart and we can see if that aligns to start building that bias while we believe that price could well indeed come back down to that area. So here technically is an order block, but I'm not going to clog the chart up. So all it is an imbalance with the previous daily candle. It's not a wick imbalance. It is should be here somewhere. Um, there you go. Engulfing imbalance. I would probably just call it something else for the argument of not clogging up the chart. Cool. So here it is. That boss area. In my opinion, there's not too much there, to be honest. Just a second. Cool. There's not too much there, but what I'd expect to happen is a wick to be created. So let's say this has got what I anticipate the daily candle to look like. This would be the daily candle moving bearish. That would be the imbalance being filled. Have a look at the bottom right-hand chart while I do this in the crosshair. We're now filling imbalance. then we start to create that wick potentially into previous, let's call it even weekly wick imbalances, find the liquidity, and then off we go rejecting and then close like so. So it's all wishful thinking, but it's good to have a plan in place, right? And therefore, when price gets down to this area, I now have more confidence to expect reaction from it because I will be just be filling wick imbalances to the lows, right? On the daily time frame. And that's exactly what we'd like to be doing. So that's a DXY from top to bottom. I hope it makes good sense. And now we'll head to the pairs. So GU, with all what's been said, keep it in mind and also put it to the back of your mind that this is what we're expecting, right? So if we're expecting DXY to potentially move towards the downside short term, we could then expect a little bit of a pullback, let's say, on our cross pairs. And I think that makes good sense. So originally, I w did not want to trade GU from the area that it's at because you can see it on daily, nothing. 4 hour, nothing. So I'm 15-minute only to identify does the reversal warrant a particular position. At the point in time we were at the markets last week, even from Friday morning, I'm not seeing anything at all. Look at the crosshair. Friday morning, 5 o'clock in the morning, we're all there, and I'm not seeing anything. I want the structure point to be broken towards the upside, come back, find the imbalance, and look what we had. So potentially, I missed a long position on GU. But I just wasn't comfortable trading from the middle of nowhere. But I've left this order block in there for you to see that, for you to see that some trades are available in terms of reversals, but I didn't feel like taking it in terms of no support from our higher time frame directional setup. And then in terms of what we had across the other pairs, I think there were better looking positions, but I hope you guys can see it. So of course, here's the key structure point that caused a low. So straight away, without a break of that structure, we recognize it's kind of an aggressive type of position. And then we had a structure point in the market where, again, it was just by eyeball to understand well, price isn't breaking it. So let's see if price is going to break it. So price pushed up in Asia, and then of course London came back down. Probably what I could have looked at is a nice Asia. The reason why I didn't is because price. I could have had a look at a nice Asia range fill, to be honest. But nevertheless, you can see how price is stepping up. But I don't count that as really a missed opportunity. What I count that is now confirmation for Monday morning tomorrow. So I now can get to the chart and say, well, now price action looks slightly different. Remember, if you're back testing, this now looks really attractive. Higher highs, higher lows, session lows still into play, which I like. And really, the criteria being then, if the DXY aligns nicely in terms of looking to short from the area, then really the question is if I can have a 15-minute bullish engulfing candle from that area to allow me with a new 15-minute order block, then why on earth should I not be looking for price to move back towards the highs, where if we head over to the higher time frame directional bias, we're definitely looking at longer term, I think longer term shorts potentially into an area of resistance towards the upside. So yes, last week's weekly candle, we closed below the weekly 50 MA. It doesn't look as if anything could be trusted from that of late, but certainly we closed, let's say, above, rejected to the downside, pushed up and closed up. Tremendous week to the highs. Last week, then we've closed below the weekly 50 MA, so we're looking at retesting that weekly 50 MA, liquidity beyond it towards the upside for price then to potentially move back down towards the downside. I do believe that is our higher probable type of position to take a short position on GU. With that said, GU, the positions in terms of, and also on the daily time frame, we've had this now as well. So that's definitely solidifying lows in the market, lower high, lower low continuation. So I like GU for the short, but I have to be honest. In terms of looking at the short positions, there is another area slightly higher. Have I put that in on the chart? So that's definitely there. While I'm here, let me just see where this order block comes out at daily. I think that's a hell of a lot higher. Yeah, right up at the highs. So in terms of most recent price action, I think here does amount to a very nice looking trade. So when we go to the lower time frames, I'm using this daily order block as a result of Thursday's daily bearish engulfing candle that actually broke structures to the lows. And then with that said, yeah, that imbalance is still available just about. We did wick up, but nevertheless, we do still, that wick up is this price action. So we still have room towards the upside to fill that wick imbalance on the daily, tap into the imbalance up at the highs, and then look for a short position down. With that said, then we're refining this daily order block up on, excuse me, yeah, we're refining this daily order block onto the 4 hour time frame. Again, very much so available, supported short by the 4 hour 50 MA and the daily 50 MA. So it's looking very nice for a nice position. Daily support and 4 hour 50 MA support. So we like it. And with that said, we'll be rejecting that weekly 50 MA straight away, which ordinarily I don't usually like, because we know the weekly 50 MA is very is a lot less dynamic, and we have a longer period of time to reject it. But who's to say it's not going to look to reject it first thing Monday morning or whenever price wants to get up to these areas? With that said, however, if we were to take the long up into these areas, the confluence being that, well, actually, we may not reject these areas straight away towards the downside anyway, in terms of the weekly time frame. So by the time we move up here on the weekly time, on excuse me, on the lower time frame, as soon as we push into that weekly 50 MA, the higher we get, it's just the better confluence. And the longer it takes for the short, it's a better confluence for rejection of that weekly 50 MA anyway. So basically, what I'm saying is I may not necessarily still like the long position, but the short position, I'm certainly in favor of that for the week moving forward. The reason why I'm not in favor of taking long on GU, it's not that I'm not in favor, it's just that I believe there are better opportunities in the chart that we could have a little bit more support based on the higher time frame directional bias. But nevertheless, you can see it looks great, right? And especially if you start to pair that with the DXY, I think it's all the good stuff, to look for a position potentially long on the DXY. With that said, we need still to be very mindful of the fact that after a low, we are expecting that lower high. This can still be the lower high. And as price comes back down to that session low, that is why I'm not taking session low or session high positions aggressively. I will always need to see a bullish or a bearish engulfing candle coming out of the area to break that 1 minute structure on the way down. Because when you have such a move like that, it's easy to say break of structure, break of structure, break of structure. But we also must understand that all that could be is a pullback to create a lower low. So be very careful if you're going to look to take that first thing Monday morning. Just have a type of entry criteria that's going to actually give you just a bit more of confidence to look at that to take it long, when price returns to that session low. Because with session lows, although I do like session lows, or what I am seeing is what the majority are going to start seeing. And when you start to see what the majority is seeing, it then becomes a very easy area to be manipulated. So the 15-minute bullish engulfing candle from the area should allow price, let's say if price is going to come down, to still give you an opportunity by way of bullish engulfing candle. So on the lower time frames, we may still break that session low and give us wicks towards the downside on the 15. I'm more concerned about how that session low is looking on the 15-minute time frame. We get some candlestick closures below on the 5 or the 1 minute. I'm just concerned how it looks on the 15. So if we get some nice wick rejections to the downside, all that's going to be is immediate long positions being shaken out straight away. Then you'll see price pop straight back through, give you that bullish engulfing. Then you'll have the order block, price then come back and look for that nice long position. So I like that. More on that tomorrow morning. AU, so I'll be a little bit quicker now for you guys since we're breaking it down nice and slow. AU, bit of a caveat to be honest. Weekly time frame, weekly order block supported long by that weekly 50 MA. So of course, ordinarily we're looking at taking price to the upside. That's what we're looking at, for seems like for an eternity. And then we've also got the nice confluence coming from the daily time frame by way of daily order block that price is just not really doing much from that area. In fact, price missed it to be honest, daily. range. Very clear to see on AU daily time frame. So let me just pop that in on the chart so we can have a look at that. So we're rejecting the daily 50 made to the downside. It's all good stuff, but we're not really doing much on the daily time frame. Clear highs in the market, clear lows in the market, and then it's just by, let's call it, we won't say coincidence, but the daily 50 MA is supporting price to the downside. So my immediate thought process is look at shorts to manipulate what that higher time frame is telling me on the daily time frame because it looks as if it can be relied upon. And then with that said, we can now look to say, well, if price is now moving towards the upside on the daily, higher highs and higher lows, higher highs, we start to look to the left and understand, well, most recent price action has given us a low in the market. So potentially after a low, look for a lower high, which could have been that move for maybe a lower low continuation back into that weekly 50 MA that's still yet to be tested. We are recognized here could have been the test, but with a new week would be expecting price to want to revert back down before the rejection towards the upside. So that's my thought process immediately. There are a couple of things to think about with AU, but we'll take it nice and simple at the moment until we get some price action tomorrow. So with that said, what can we see on the 4 hour? Highs in the market, higher low, higher high, key structure point that price is failing to break below. Not making any further higher highs. I think that certainly supports the range in terms of the daily time frame. With that said, it doesn't mean I wouldn't necessarily look at a short position, and it doesn't mean I wouldn't necessarily look at a long position. I quite like it in both directions, I'll be honest, team. The 15-minute time frame looks quite nice. We've broken, just like GU, broken those structure points towards the upside. Nice session low left behind. What I also like is the fact we do have a 15-minute order block. So with the 15-minute order block, I can be a little bit more aggressive because the order block's already there. Supported with that session low, it just gives me a nice confidence in terms of where I believe I should be putting my stop loss. So what I'd be expecting to see is really price start to stab into these areas, give me a lower time frame break of structure here, but still respect that 15-minute order block towards the upside. And then all what's going to happen is this is a 15-minute candle printing. And then my anticipation would be that we, of course, reject the session low on the 15, but most importantly, we reject the 15-minute order block on the 15 as well. By the time that happens, I'll be break even in the trade. The only downside to that is, of course, 4 hour 50 MA, most recent candle closed below it. So we would have to look to manage that by the 4 hour 50 MA, which would be well and truly doable, to be quite honest. However, again, Monday morning is nothing that I'm probably going to be looking to jump into right away because I believe the better position would be the short position. And that's fine to miss the long positions, but it just means when the shorts appear, I want to be in the markets looking for ways to manipulate that. So while I like the short, of course, a daily range, I want to be taking that from the highs of the range, supported daily 50 MA, daily order block that price is failing to close below. And of course, with everything we've just said, could we potentially expect DXY strength to come out of the market? Yes, we can. So if we miss the DXY weakness, which we believe could well be short term anyway, with AU then pushing up based on the weakness, then I'm definitely want to be in the market for DXY strength coming out of the market, which let's face it, weekly, daily is all indicating DXY strength. Therefore, my higher time frame play, I believe, makes a lot more sense to take the short position down on AU. So again, I don't mind the longs, but I think the shorts definitely the way to go coming into the week. So that's AU. EU, much of the same. In fact, it's all pretty much in sync team. I like the fact with EU we don't have the conflict with trading out of a weekly order block to the downside. So really, that's just telling me, hey Charles, just look at one position on potentially EU. I recognize you've got the same type of structure formation. However, it's still the same. I believe that the best play is going to come from a potential short from those highs. Now, we've got a couple of things to think about. The daily 50 MA is doing the absolute business, as I like to say. However, there is no daily order block for me to look to manipulate. So I'm down to the 4 hour time frame to have a look at price action and structure. Now, the 4 hour time frame is not really doing a lot for me. I still believe we are in that range, particularly because we've failed to close out of it. So really, I can say if the range started from here on the daily time frame, we are still in that range. So that does actually give you reason to look for a long position. And that is already confirmed. This is exactly the type of formation that I'd be wanting to see coming from the lows of a range. I don't want to be in the range first. I don't even want to be in the range second. I'm happy to be in the range third when everyone's just kind of like, it's not doing anything. But we've identified that it's actually doing a lot. This, in fact, is doing something. Broken structure. This is now telling us we're potentially moving towards the upside. We then come back down to an area, we then show ourselves, and off we go, potentially towards the upside. So I recognize structure at the moment is no longer telling us towards the upside, but the point of the matter is look where we are on the chart. Lows of the range, session lows respected beautifully, and price is stepping up despite not making clearer, higher highs at this stage. The point of the matter is we're not breaking structure to the downside. Again, of course, there's still the same caveat with session lows always. I want to see price doing something from the area. So absolute minimum is going to be a bullish engulfing candle, 15-minute order block, price then comes back. And at that stage, I will look for a bit of a cherry on top of the cake in terms of a 1 minute break of structure because we're already there. So I would much rather come to the charts tomorrow and price has taken off and broke some structure points and then come back. I don't really like trading from positions or areas on the chart that already look good. Because it's almost a little bit too good to be true, if that makes sense. The setup is already confirmed last week. We want to see something fresh coming out of the market. So I've got that structure point on the market. I'm not really too concerned about price having to break this structure area just here, but certainly this structure point in the market and at this stage, I want to see broken towards the upside, come back, give me my entry criteria, and I'll look for that long position. So I like EU, based on the range, to be honest. Let me just double check why I didn't like AU because I can see we're at the lows of the range as well. So am I just being horrible to AU? Either or, to be honest, I actually prefer at this stage, based on the 15, I prefer AU to EU because there's some work to be done. There's some room for price to move. I don't like EU as much because price is already there, which is telling me, well, is the DXY already there? Perhaps the DXY is already there as well, but I wouldn't be wanting to look at shorting DXY straight away Monday. Want to see something happen. So I guess they're equal for me, to be honest. EU, AU, I think they both look good. The one that I'm probably going to move without will probably be GU. But if GU starts to break structure points towards the upside, pull back, give me my entry criteria, I'd consider it. But I mean, the pink ones, they make the girls wink, so they're my favorites at the moment. And then with that said, just to finalize on that, we are in the midst of a range. However, if the DXY starts to play ball and my illustration is wrong, and in fact, price is looking to continue its bearish move. So despite being in the range, we still must understand that daily 4 hour candle, look at the weekly 4 hour candle. The weekly 4 hour weekly 4 hour candle. The weekly candle has closed. If we was to do that with the range, bearish candle that has taken out 1 week, 2 week, 3 week, 4 weeks worth of price action, we've finally got a bearish close below. So in fact, after a low in the market, what would be expected? A lower high, which would be a pullback on the lower time frames. So potentially we could have that pullback into a 4 hour order block that's now available and being respected. I just want to double check. Is that 4 hour order block been mitigated? Yeah. So what I was trying to do is work my way down the range to see that if I was incorrect, well, correct about the range, but if I'm now lagging behind, and I should start to say, well, price is now has moved on from your thought process, Charles. Catch up, moving everything to the left-hand side. I've got order blocks available. So this order block nicely supported by the 4 hour 50 MA. Have a look at price action and structure. 15-minute time frame is moving really, really nicely in terms of clear lows in the market. Order block that caused a low, 15, lower low, order block that caused it, refine within the 4 hour. I think the short position is really, really nice. And as I said, if you do want to trade into where you'd like to take the short position, it makes good sense. It really, really does. There's nothing wrong with that at all. So that's what I like. I like the short positions. And of course, if the long presents itself and we have good enough range, then it could be one to consider. But definitely the shorts, I believe, are the way forward based on longer term DXY strength. GCAT. So these have ambers. So probably going to give those a miss depending on what happens overnight. If there's any nukes or they start to play with their rockets, and we might see a bit more of movement on GCAD. But at the moment, I just feel like I've just missed the boat with GCAD, unfortunately. Waiting for price to pull back, it really never did. Had one opportunity up at these highs, wasn't really comfortable to. In fact, no, I did take that position. But since then, there's been nothing else on GCAD for me personally. Now, the story's turned a little bit somewhat. So we recognized GCAB was extremely bullish. And of course, after the bullish move, this has been on the market for about a week now. This hour on the weekly time after a high, we expected the higher low, and it's just happened. It's just unfortunate there was no real entry, and now we're pulled into an area that well, I won't see as imaginary, but it's the only fifth weekly order block available. So of course, we put it on the chart. It's not supported long by the weekly 50 MA. So with that said, of course, the caveat being maybe price may want to do something like this. And that's fine. But until we do get a weekly candle closure below that weekly 50 MA, I'm going to continue with the facts on the market. Now, what I want to refine that that weekly order block, that I have to say is just in the market because there is no other weekly order block there and price is bullish. So I want to put in a bullish order block to support my higher time frame trend, fair to say. Refine that order block down. Here we are just here on the daily time frame, daily order block. Again, I think that makes the picture look a little bit better if I do that. And if I mark out structure and say, well, we had a high, high, low, high, high, and low, high, high, daily order block that caused it. And off we go. The only annoying thing is on Thursday, look what happened to cause the reason why I didn't want to take a long position on GCAD. Daily candle closure below the daily 50 MA, meaning that my range back up to rejection of the daily 50 MA to the downside was so very minimal. You can see we tried to reject it, in fact, but the importance being, look what we've done. We've now closed above it. So we now, for at least the next 24 hours, have the daily 50 EMA on side. I know it's ever so slight, but it's on side. We had a candle close above the 8 daily 50 EMA. Therefore, I'm expecting for the day price to push up, reject it, and then find that next rejection on the EMA. So at the moment, GCAB, maybe it will promote itself to maybe a green, but at the minute, I'm in favor of long positions. Do I then have range up to the 4 hour 50 EMA where price is, of course, trending in a nice lower low type of fashion, huge lower high, lower lows along the way, but price just didn't come back to this area. So we're moving on, and then price has now made a new low from here. So we'd be trading what? A lower high. Does it make sense to trade that lower high? It does based on the higher time frame analysis. Back up to perhaps 4 hour 50 MA in terms of management, and then here would be my clear target. So areas where I wasn't able to short from, potentially we're in the market for a very, very good looking, nice long position there on GCAD. So yeah, maybe GCAD can find itself up the table a little bit better. So with that said, what am I looking for? Well, coming out the area, we've got some really good signs already. We're respecting that date, that 4 hour 50 MA refined from those higher time frames. In terms of structure points, I'm not looking for this to be broken first and foremost before price does this and pulls back. I'm not looking for that. I'm happy to be a little bit more aggressive than that, particularly when we go down to the 50-minute time frame. So let's have a look at the 50-minute time frame to see what's there now and what could well be there available tomorrow. So much like all the other cross pairs, beautiful development of 15-minute price action, breaking structure points. And of course, this was guesswork, broken Once we've had the price make that high and then come back for the higher low, higher high again. No longer guesswork. That's confirmation. We're breaking structures continuously towards the upside. And what I like, again, nice clear session low in the market. So it's pretty much a lot of session lows looking type of a position. With that said, no 15-minute order block. So you guys already know what I'm going to have to do. I need one to be creative. Bullish engulfing, 15-minute order block. Look for a 15-minute candle, sorry. Look for the order block. Then when price comes back in, I could take that as a limit order or get the cherry on top of the cake, 1 minute break of structure, and off we go. So that's my session low types of plays. Depending on the session low as well, to be honest, I would be in favor of taking limit orders, but because it's Monday morning, I don't think I should be taking a limit order first thing Monday. I think some confirmation to support my thought process is going to look good because once price starts to come down Monday morning, we don't know if Monday morning we're just going to be bullish, excuse me, bearish all day. But at the moment, I'm sure you guys can see that price is developing nicely. I see a very clear place to look to manage the position, if not by that 4 hour 50 MA, imbalance in the opposite direction. That could we say there was one hit? That's tap. So I'm no longer having to manage by this imbalance because it's no longer available. And then with that said, to be quite honest, we're making lower lows, call that the lower high, lower low, lower high, lower low. So here is the key structure point in the market where I would expect a reaction south from, but that reaction south I hope will just be a pullback, rejecting the order block, and then off we go to into that 4 hour 50 MA, and then hopefully if the strategy then fails us up into those highs for a really nice looking position on GCAD. So it's not wishful thinking, just all depends how price acts come the week. But for now, I think it looks quite nice. And in terms of short positions, it's difficult to bet against it because look how bullish we are on the weekly. I really want to see a weekly candle close below this order block. Alternatively, price come right back up to those highs that we were just speaking about, which is this 4 hour order block. And then most certainly I'll be looking for a short position from there. But that's really not based on, yeah, I guess you could stretch based on higher time frame analysis. We're just about into that daily order block. Of course, up here is definitely wishful thinking, but you never know what can happen in the markets. So yeah, I would be looking at a short position from here, but let's see what happens when price gets there. Hey. So that's my thought process on GCAD. Would I be shorting from this area? Would be the question of the day. Probably not, based on the range that I have. I could well entertain an Asia range if one develops over the crossover. So we're looking at something like so. Can I see a clear break of structure in the market? Yes, I can. Here is a 15-minute order block that's available. So what I'll need to do is wait for my 1 minute break of structure or wait for London to break those Asia lows, then pull back and look for the short back down to fill Asia. So yeah, I'd like the Asia range. But in terms of anything else, based on 15-minute price action only, I think it's a little bit too early to say, based on the fact that it's a Sunday. We got a whole week ahead. And so our higher time frame directional points of interest are definitely better to hang our hats on and look to trade from there. US dollar CAD. What do I have on US dollar CAD? Yeah, definitely missed the boat there into the weekly. Well, I didn't miss the boat, but you can see the candles developing out of a higher time frame point of interest. So naturally, I'm going to look to say something like that. But weekly order block price dumped out of that weekly order block, looking to then price pull back into the area. We now have, what do we have? So higher time frame directional play. Once we have a look at this. Where's that gone? So you can see that I am refining areas down. Cool. So here is that weekly order block that is only in the chart as a result of that bearish candle closure. So we're using the order block left behind. When we start to refine that order block, there is a daily order block within it. And the reason why I'm using this daily order block just here is because it's the only daily order block available. That's fair to say. And of course, once we've made those highs in the market, expecting the higher low. So that's what I was looking to trade, but not a lot in terms of pullbacks, unfortunately, to look to take that. However, price now has developed and it's down to us to look at what we're going to do. So, towards the upside now, I put in a random order block supported by the daily 50 MA, first and foremost. And that order block actually held really, really nicely. We had the rejections from it, and then we had this beautiful, I just love to see it from a daily, from any EMA. Bullish engulfing, wiping out price action, giving me the most perfect daily order block, supported long by the daily 50 EMA. So I think we've got a nice trading range in play here. Towards the upside, this daily order block just here, and then, or rather to the upside, this daily order block here, and then to the downside, this daily order block to short out of higher time frame directional plays. So I like that a lot. So let's refine those areas down and see where we lie. 4 hour time frame. Why have I done that? Okay, because that's mitigated. So when we're looking to refine this daily order block down, we have 4 hour time frame. And price action is, of course, bearish coming out of those highs. However, of late, we've rejected the daily 50 MA towards the upside. We're now above the 4 hour 50 MA. So to be honest, I'd much prefer price to come back down, retest that daily 50 MA for the day, look for the rejection back towards the upside. Before then, my bias would then change and I'd look to take a short from there. So as simple as that, to be honest, team. I think UCAD deserves a bit of a promotion. The trading range is really, really nice. And you can see that just here. Refine this 4 hour order block down, 15 right up at the highs. Refine this 4 hour order block down, 15 right up at the lows. Of course, in the midst of that, price is, of course, trending towards the upside, potential session low. And I think that was a nice opportunity potentially on UCAD. So we had the session low, 15-minute bullish engulfing candle. Well, it was bullish, not so much engulfing, but it certainly left an order block behind. Price then tapped into it once. What I would have loved to have seen is price come back. It didn't, unfortunately. So no entry for me there on UCAD. But you can see the strategy just making sense and working out. So we had the high in the market after the high, higher low, session low respected, push towards the upside, breaking structure points that caused the most recent low into the market. We left an order block behind, come back, and look at that higher high. So bigger picture, higher high, higher low, higher high, intraday, breaks of structure. It's just perfect. It's absolutely textbook. So moving along, session lows certainly still in the play. 50-minute order block. I feel like we've moved away from this now, just in the market, just to show you. As we start to move up, all the other 15-minute order blocks, as we start to step up price, they've been mitigated. So I don't want to say that the boat has been missed, but I don't like taking positions like this now when the session low is still so close. Or I have a couple of reasons to lose the position, and what I'm saying is I need some confirmation to take that long position now from this area. What I need to see is price break up, respect this order block, look for a break or structural bullish 15-minute engulfing candle and take price back up. With that said, don't feel disheartened if you cannot take that position because we know our higher time frame directional trades is certainly where we're looking to go. But if you remember what I said at the beginning of the session, I'm looking at doing a little bit more in between the highs and lows. And this is exactly what I mean. More often than not, we'd just be referring to 15-minute time frame only. And when it looks good, execute, right? So higher high, looking for price to pull back potentially. This is the order block. Potentially, if pricing comes back to the session low, I will be aggressive here. But what I say, aggressive is not really aggressive. I will look for a 15-minute bullish candle that will allow me to have a 5-minute or a 1-minute order block and even a 15, just like this. And then I'll look for price to return and then take that long position like that. I think that would be a nice looking position as well, on the basis that, of course, we break up. So if we break up, entry criteria. If we then pull back down, entry criteria, look for the long. Then if price comes all the way down here, then I'll be looking for a long position from those areas as well, which potentially I'll be a little bit more aggressive than I am here. Perhaps straight away I'll go down to the 1-minute time frame, identify price action stepping down, lower lows and lower highs, wait for that break, pull back, off we go, and I'll look to take that position. And it's the same play here. So you can see I'm doing the same over and over again. So that is UCAD. Quite like UCAD. Hey, with that said, I forgot to mention UCAD with the DXY alignment. We're expecting DXY strength at some point. So whether or not it's from this point here or this point here, just flick to the DXY, have a look where the DXY is. Is the DXY now has the DXY now broken to the downside? What I mean by that is once we have the DXY pull to the downside, that's DXY weakness, US dollar CAD moving to the downside, potentially in and around this area. After then, the DXY has moved to the downside. Double check where it has moved to. Is it now into this hard time directional play, or is it just back into this key structure point? So the key structure point would potentially align really nicely with our kind of mid position, potential session low area, or if the DXY just has a complete melt and a slide back down to its higher time frame directional play, then we can have a look at US dollar CAD coming down to our higher time frame directional position to look for the long position. Hence why here I'll be aggressive based on where the DXY is here, a little bit more based on the DXY. So I hope that makes sense, team. And then finally, US 30, we're back to it. What I'll do, because I don't want this to be too long-winded, and then you guys look at it and say, you know what, I can't be bothered to watch that. Charles is off on a rant again. I'll leave this to tomorrow morning. So, team, I hope that has all made sense. It's probably around dinner time for me now. And yeah, I wish you a very good weekend. I hope this breakdown reads, looks, sounds well when you're able to have a look at it. And I will catch you all first thing tomorrow morning, 0500 GMT. So that would be 6 local here for me. Anyone else in Milan, I won't say any names. Rob, I will definitely get back to you at some point, my friend. But generally speaking, if you like pizza, pasta, and all types of carbohydrates, you're in the correct place, my friend. Take care, team. All the very best. Speak to you all very soon.